Text Expander from Smile is supporting this edition of MacVoices. Text Expander can help you be more productive in every single application on your Mac. Find out how at textexpander.com. Welcome to MacVoices. This is the talk of the Apple community, and I'm Chuck Joyner. Folks, last week Apple had its April earnings call, a much anticipated April earnings call. And so that means this time around we get to talk to Mr. Mark Fuccio, as we seem to always do after an earnings call, Mark. I guess when I think of you, I think of money.
Thank you. That's a compliment. That's not a bad thing.
You capitalist, you. So, Mark, the earnings call, I don't obsess over it the way some folks do, but I always come away with one or two takeaways that I think are important. And my takeaways this time were, number one, that in spite of the COVID situation, Apple beat expectations. And number two, they did not give any guidance for the June quarter coming up. So did I miss anything you think that is really important, and are those the two things we should be talking about?
I think that what is going on is that they really don't know what is their business going to be, because they don't know if we speak narrowly of the U.S., we don't know which states, which cities are going to open up and when and how. And similarly, ditto across the entire globe. I think the interesting thing was that Tim Cook was describing. They're describing sort of three epochs. A 5-week, and a 3-week. First 5 weeks going into January through first week of February, everything was going strong. Then the bottom seemed to have fallen out. That's my interpretation. That's not what they said, but certainly it was dramatically down, and then things picked up again. So in the last 3 weeks. So they also made comments about their online store. So I think there's probably certainly a shift for people who know what they want to buy, that they can go to Apple or any of their online resellers and order that watch, those, your AirPods, etc., and get it delivered to them automatically, minus the pleasures of actually going in and picking stuff up at an Apple store. I know I really don't enjoy going to an Apple store. I'd just rather have the convenience of having things, show up at my doorstep. So, I think that may be an interesting change in terms of some of their purchasing power. Going forward, who knows what's going to happen? So I think they joined a chorus of many other companies that are suspending giving guidance.
And I personally think that was a terrific thing to do, because you're right. They can predict a lot of things, but they can't predict that. Because if the states order stores to be closed, it may not be up to them as to what they can open or not open. And I'm talking strictly, obviously, about the U.S., but those same regulations may apply to other countries as well. So why would you give guidance? But at the same time, I guess I feel really good about this company, because I don't feel like they're a generic purchase. I don't think you purchase an Apple product by mistake or just because it's there. I think that most people kind of intentionally buy an Apple product, be that an iPhone, an iPad, a Mac, an Apple Watch, whatever. Because let's face it, they are all across the board pretty much a premium price product.
Right. I think all of them are. And, I think, again, just sort of looking at some of the results, product sales were down in their sort of big screen devices, phones, iPads, Macs. Wearables were up. So, the, tiny little, screen on the watch, as well as the earbuds, it's, I'm not using at the moment. That was up, about 23% year to year, for the same quarter. So that's a dramatic increase. I think that's showing, the broad appeal of a lot of Apple products. I think also too, services were up 17%. So I think they're showing that it would be really interesting to know how that breaks out, because they have all their content like Apple TV, in addition to music. Plus they have news, and they have whatever their processing fees are off of the Apple Card, and as well as Apple Care, and everything is put into this one bucket called service. So given that sales of iPads, Macs, and iPhones were down, I doubt that they saw a dramatic increase in Apple Care sales, et cetera, associated with those products. So I've got to believe that a lot of the increase in service revenue was some of the new media services, game services that they've brought online. Plus, one thing we've talked about from time to time on the show is whatever the contribution is from the Apple Card to Apple's bottom line.
You went exactly where I wanted you to go, the Apple Card. I have one. I'm sure you have one. A lot of our listeners and viewers have them. And Apple has been, I think even now, they've done it again, where they will let you defer payment without on your Apple Card for a month. And the first time they did it, then the second time, you had to call back and do it. The third time now, I think you have to call back and ask for a deferment again. As far as I know, because I haven't done it, but as far as I know, I don't think you have to give any justification. You just have to ask for it. And as long as you are, an Apple Card holder, they pretty much give it to you.
I saw the news on it. I didn't look into, availing myself of that deferment. So I don't know if they ask you just to validate your name, and that you can still have a pulse and fog a mirror, or if they ask any more information about your personal or financial situation.
Yeah, and I mean that would be kind of interesting. The one thing I wanted, and I haven't been able to find anything about it, is if that affects your credit rating. If you decide to do it, whether you genuinely need to, or whether it's just a way to save a couple bucks in interest, or keep a little more money available if you have any kind of significant balance. But I will say this, I don't remember seeing any of my other credit cards send me those kind of offers under any circumstances.
So I would speculate that it probably would not impact your credit rating, in part because it's something that they're offering. And I think this is part of a broader theme of Apple trying to do well for its customers and people on the planet. Witness all the investments they made in creating personal protective equipment that they talked about on the call. So I think similar thing for deferring payment of a month, balance for 1 or 2 months. However, I think at whatever the end of that period is, if someone doesn't do it, then they'll get zinged, and that's just business as normal for credit cards and repayment of debt.
Right, but I don't think you're going to get zinged at any more than the stated agreed upon interest rate. So
right.
It's a really interesting question. So if I defer my payment for 3 months, does that mean that I charge interest for those 3 months, or that I don't have to make the payment? I mean, again, I admit I have not looked into this.
That's an appropriate question. Again, I don't know what the answer is.
Yeah. So folks, if you've done it and you don't mind sharing that information with us, drop me an email, chuck@macvoices.com. I'd like to know. And in fact, I probably should have thought along those lines ahead and called and asked if I could defer my payment just to see what the terms were. But one way or another, I mean, it's a feel good move, and it certainly looks good for Apple. And I don't know, maybe this is a wishful thinking, but I feel like it's just one more reason to use your Apple Card in a situation now that where contactless payment is a big thing, because you don't have to touch anything.
Oh yeah, I mean, we've done that. My wife and I, we go out about once every 3 weeks, to get basically fresh fruit and vegetables. because we've stocked a freezer, et cetera, with food. And the benefit is, with the Apple Card, you just go in and it's, you don't have to touch it. You just hold it near the, the payment, system. You don't have to hand it to the to the store, to the cashier. And it's really great, I think, in terms of bringing a lot of payments to the fore. The other thing that, again, just thinking about services is, there was talk about, Netflix, that they had U.S. subscriber growth during this period. It's generally attributed to, people wanting to consume Netflix video content. I'm wondering how much of an uptick, again, that Apple had in their services revenue, for some of their media things like either music or games or Apple TV.
Wow, I'm embarrassed that I didn't even think about games, um, because that's just never on my radar. I thought in terms of Apple Music, which I do use, and frankly, during this situation, I have been using a lot more. As working from home, there's certain things that I want to put on as background music to sort of help stay focused.
Mm-hmm.
And so, I'm using Apple Music probably more than I ever have. Apple TV, not quite so much, because the programming that has come out really just the ones I've wanted to watch, I've already watched. The things that are coming out right now haven't really struck me as something I want to take the time to do. So, but I didn't even think about games because Mark. It seems like across the board, folks have felt that the Apple Game Service, whatever it's called, is a pretty good value for the money.
Yeah, I think it's $10 and a month, and you get, I believe they have almost 100 games out there, and yeah, I think that certainly is good value. I should call my nephew and see or one of my nephews and see what they're doing. One's in the Apple universe, and the other is on Android. So we'll have to see if they are picking up on using the service. But I think it's really interesting to me to think about coming out of this, what some of the longer term permanent changes will be. Certainly, Apple has invested a lot of time and money, and they're trying to make the Apple Store as a social gathering location. I'm just not sure how quickly people will go back to wanting to go out to socially gather instead of socially distance when they go out into public.
I don't know, judging what I'm seeing here, because in Pennsylvania they just gave us a few options. Certain outdoor activities could again be engaged in a very limited fashion, and of course they're encouraging social distancing. And every one of those options that I saw or had occasion to observe from a distance was packed. I mean, and I'm not always sure that the social distancing, frankly, was being observed, but I think people are just hungry for almost anything at this point to get out and do something.
Right. Yeah. So we don't need to turn this into a COVID-19 show. Other things, I noticed just looking at the, Apple's, 10Q that they filed. Well, I guess the first thing right off the top is, they say in their press release that, EPS was up, earnings per share was up 4% year to year. Well, in reality, their net earnings were down. So someone is certain to ask, how did EPS go up? And the reason is they've been purchasing their own shares and buying them back. So earnings per share, you divide whatever their earnings were, divide the number of shares outstanding, and shares outstanding went down about 5.6. Sorry, went down about 4.2%, from March quarter 2019 to March quarter 2020. So that's why the EPS has gone up, even though net revenue was down and overall earnings were down. So that's a good thing. Interestingly, Apple allocated, the board did another $50 billion authorized for share repurchases. So that's very, very positive for shareholders. So Other interesting things I noticed is they had about year over year about a $2 billion increase in manufacturing equipment. So, uh, as Tim Cook was saying on the call, they have lots of new products in the ballpen to come out. You know, I imagine just increasing manufacturing equipment is a clear sign that there's a lot of new stuff to come as well.
This edition of MacVoices is sponsored by Text Expander by Smile. The odds are that if you're working from home, and will be for the foreseeable future. You are answering the same questions for clients over and over all day, and your coworkers and employees are probably doing the same thing. And that's where Text Expander can help. With Text Expander, you can craft the perfect answer to your frequently asked questions, put it in a snippet, then insert it into an email or a text message or a social media post with just a few keystrokes. Better than that, you can then share that across your entire organization so that everyone is delivering a consistent, high-quality message. That cuts down on confusion, mixed messages, and inaccurate information. That saves time in answering those questions and saves time by preventing follow-up questions. And company-wide snippets are just part of the story. Snippets can be customized to insert various specifics from a pre-created list so that your messages can be even more customized for your clients, yet consistent and accurate. And no matter what platform you're working on, Mac, iPhone, iPad, Windows, Chrome OS, or where you're working, home, office, car, in the backyard, in the basement, Text Expander is there for you to make you more productive and more consistent. Now, I can't understand why you wouldn't be using Text Expander, but if you haven't seen the light yet, you can visit textexpander.com right now to give it a try for free. You will be up and running in minutes and being more productive immediately. Again, visit textexpander.com for your free trial. Text Expander from Smile. See what all their world-class software can do for you at smilesoftware.com/podcasts. Thanks to Smile for being the longest-running sponsor of MacVoices. Mark, on the share repurchases, is that something that folks should see as Apple trying to prop up its share price? I mean, this is not something that just happened this quarter by any means. This has been an ongoing program now for some time. But any messages you took out of that the fact that they're continuing this, and it sounds like in a fairly aggressive fashion, because 4.2% of outstanding Apple shares is a lot of shares.
Yeah, I mean, there's 4.4 billion shares outstanding right now. So share repurchases, some people think it's a cardinal sin and it's horrible, but really all it's doing is it's returning money to shareholders. And typically it happens when a company generates more cash than they can profitably use in their business. So share repurchases are a way to give the money back to people who own the shares. So Apple has certainly done that. They've said over and over again that they want to get to a cash neutral position, meaning that they don't add to their stockpile of cash, but through repurchases as well as dividends, that they return their outsized accumulation of cash profits, that they return it to the owners of the company. So I think in that regard, I think it's a good thing. Some of the people may remember history back in, when was it, 2012, 2013. Carl Icahn, famously had an investment, and he wrote some letters and had a number of meetings with Tim Cook. I think that sort of, my recollection was sort of the start of Apple doing share repurchases and starting dividend payments, because certainly I think they generated about somewhere between $13 to $15 billion of cash this quarter. They don't, times four, they're generating $60 to $70 billion of cash per year. It doesn't take all of that to run their business, even at the high levels of R&D spending that they're having. So, I think it's better to return it to shareholders. And for listeners of the program, I would say one of the benefits of that is it will stop all these inane comments of analysts saying that Apple should buy Tesla or Netflix or some other POS company that they have a good feeling for at the moment.
S- But you don't disagree that Apple should be making strategic acquisitions.
I fully agree with that.
Okay.
But I think the idea that they should create a satellite-based Wi-Fi service or a satellite-based telecommunication service. I think things like that. Analysts have said, but I think they're some of those comments are not even dumb. That's how dumb they are.
I remember saying, I don't think it was that long ago, it's within the last few weeks, that this might be a good time for Apple to buy Disney. Why?
Yeah.
Yeah. I mean, what? Okay, so you can buy Disney, and certainly there are parts of Disney that would probably fit in well with Apple's model, but there's also a lot of stuff that just would be completely outside Apple's wheelhouse. Not that they couldn't manage it, but why would you want to?
Right. I think they've been very good at maintaining very, very sharp focus on what they do and what they're able to do. And I mean, we've had discussions on this show before with people like John Martellaro, who says that Apple does this because, given their management structure, that they can't grow outside of it. And I think not. I think if you look at how they diversified into video over these past 4 or 5 years, it indicates that they can get into new lines of business, but they have very high standards in terms of what they want to do, and they just don't want to willy-nilly throw cash at problems. They're not like the U.S. Congress, throwing trillions of dollars, to try to do good in the economy.
Mark, something that I saw a couple different places, and I always get strange about this. They're looking at the percentage of iPad shares. The percentage of the market share for iPads and Apple tablets, and the market share of iPhones and all, and they insist on doing it on a quarterly basis. And I feel like a quarter is a pretty short time, absent introduction of some radically new version of a product, that it doesn't have a lot of meaning. It just feels like filler. Would you agree with that? I mean, and if you do, then what would a long enough time term be to establish some kind of intelligent decision on trends?
Yeah, so that also dovetails into a discussion about reporting of results of public companies, and there's a lot of discussion out there that doing it on a quarterly basis is too frequent and in some ways meaningless because things don't change that rapidly. Famously, Warren Buffett says that things should be reported on a once a year basis so that people don't have to worry about is Apple worth more or less today than it was a week ago, now that we know that they had a really okay first quarter compared to the horrors that many people expected. So yes, I think in terms of market share, when I see those things and they say Apple share dropped and it's something like 0.2%, that's just noise. Keep your eye on the big picture in terms of look at it on a yearly basis, not what happens each quarter, because there's so much variability in when and how people buy things.
Good, because that's the way I feel. I mean, like when the Apple Watch came out, I thought it was completely legitimate to look at market share for that, because they were getting into a brand new category and all, and how much was it going to affect the Apple bottom line of all companies? But there was some relevance there. But especially during this time period, it doesn't feel like it's relevant. And now I'm about to contradict myself, because I do want to ask you with the changes that are going to be occurring in business after this, because it seems like everybody that I'm reading is agreeing that business is not going to be done exactly the same way. There are going to be a lot more people potentially working at home now. There is obviously being a lot more. Right now, there's a lot more business being done via video conference, whether it's FaceTime, Zoom, Skype, whatever service you're talking about, WebEx, GoToMeeting. Do you think Apple's poised to take advantage of that because of the ease of use of the iPad and the Mac, the quality of those devices, or do you think that's just not relevant?
Um, I I do think that they're in a good position, to be able to see, their sales increase, as a result of this general trend to work more at home. I think um, there were some news stories in late March, I believe, that iPads were hard to get because in China they were sucking up a lot of demand because you know Chinese parents were having their kids use devices to attend school there. So um, I think we see similar trends here. I think from a longer term perspective, I think the fact that, and this has been proven and documented by use of Macs at IBM, that they have dramatically lower costs to support. Um, I think that's a good strength that Apple will have. But I think this is short term people buy it because they want something new instead of that 8-year-old Dell or HP box that they're using. So I think some of those people may start to buy Macintoshes or iPads, depending on the you know, depending on whether they can just get by using apps in a browser, or if they need the full multifunctioning capability that you get on a Macintosh. But I think these are things that will take several years to play out. But I do think that we'll see a return to growth, for Macs, especially if some of the rumors out there about an ARM-based Mac coming in 2021 are true. Benefit of that is, I estimate, they're probably paying 40 to $60, on top of the silicon costs of profit to Intel, and by running it through TSMC, where they're getting all the A processors for iPhones and iPads, Apple will be in a position that they have a lower cost base, and they can either use that to sweeten their margins, or probably more importantly, push down and be more aggressive in terms of having maybe a $500 or $600 entry point for a Mac, instead of the $1,000 point that they have now.
If that were to happen and they don't compromise or aren't required to compromise the Apple experience, if you will, then I mean that could be a bit of a game changer, because now suddenly you're competing on a lot closer to a level playing field with some of the others lower priced devices. And I mean, we've said it a million times on this show. I don't want to see Apple engage in a race to the bottom, because that just nobody wins there. But if, on the other hand, if they can lower their price point and still keep the quality of the experience, then it's a win-win for everybody.
Sure. What's the entry price for an iPad? It's $299 or $349. So
Yeah, something like that.
yeah, so you can imagine that, using, in essence, that the guts of that electronics, with a bigger screen, add a keyboard, maybe add more RAM and SSD storage. You get up to 500, 600 point. Just looking at some of where the middle level of some of the iPad products are now. So I don't think it's that far a stretch, and certainly, um, everyone has a wonderful experience on their iPads, and I believe they talked about iPad satisfaction, or maybe it was just iPhone satisfaction on the earnings call, and they're sky high. So I don't think coming out with lower prices means that they're going to get into the race to the bottom and destroy their user experience and ship junk products. That is what many of the PC companies did, as they tried to get below $500 for a notebook, or in the old days, as they called them, netbooks.
Oh, that's a term I haven't heard for a while. I and just I guess late last week, I had a call from someone who was asking me, how do I do this on my tablet? And I was telling them how to do it, and I was telling them how to do it on an iPad. And as the conversation progressed, it became evident that they were using an Android tablet. And it's like,
Oh,
well, A, I don't know how to do it. B, I don't even know if you can do it. It ended up they called me back and said, yeah, I can't do it. I looked it up. It's not compatible. It's like, wow, okay, that's interesting. And so I looked at that and I thought, this I almost, as an Apple fan, I want to see that happen more. I want to see things that people want to do be able to be done only on an iPad.
mhm.
But I don't know how realistic that is, and a lot of that is under the control of the software developers as they decide what to support or not to support.
Yes, indeed. But I think if we look at, I know if I look at, a lot of the apps available on an iPad, if it had better, easier to use multi-window based multitasking instead of its sort of fixed pane things, um, I could see myself doing more, creative work on it instead of email and reading and other consumption type of activities.
But that's you and that's me, and it's
Yes.
a lot of the folks that are watching this. But for the oh boy, I hate the term average worker, average anything, but for the average worker, I mean that's kind of what they do with their machines. There's not necessarily a lot of multitasking going on, or maybe between a couple programs. But certainly the majority of their time is not spent in a multitasking environment. So, is that really a disadvantage at this point to the iPad for that particular segment of the market? I don't know.
We'll have to see. Because in the past year they've added all sorts of support for having external storage, having external keyboard and pointer devices. The new version of iOS now enables that. So we'll have to see how things evolve.
Yeah. Anything else from the earnings call that you think were significant, or that folks should pay attention to?
Um, Maybe one other thing, they 6% increase in their dividend. So again, that's returning money to shareholders. So if people are interested in that, that's something that they can avail themselves of. It's interesting. Apple peaked back in January, then collapsed, and has had a nice recovery. So um, I wouldn't say it's a screaming buy at this point, just because we don't know what's going to happen in the overall economy. And as much as the market has gone up this past for April, it looks like the market may be taking a step downward. And if it's one of these two steps forward, one step back sort of moves that has characterized most of its behavior in April, or if it's a fundamental going down and retesting at the bottom, only time will tell. But that was one thing. The other thing is, it looks like there's more litigation and potential litigation expense overhang, that is out there. But I think from a shareholder's perspective, that's something they'll just pay out of their cash hoard. It's not something I think will necessarily affect their profitability on a quarter by quarter basis as they manufacture and ship these devices.
Some of this will be a fun discussion to revisit at the end of the June quarter to see what I'm not sure we're making any predictions here. I don't think we are, but I think we're trying to identify some things that may affect Apple in this coming quarter, and we'll see how it goes.
So one last thought I had that's not necessarily directly relevant in terms of their financial results, but it dovetails into they've done so much for COVID-19, for trying to remediate people's suffering. Makes me wonder about a watch that would it be feasible that Apple adds a thermometer, temperature sensor in there, so that people could baseline their body's temperature, so they could get an alert if their temperature is rising. That seems like that's something that I think the technology is available and doesn't require necessarily any FDA approval. The other thing is some sort of oxygen sensor. And again, that's just another indication of your overall health. And I think that does require FDA approval. And the reason I think something like that is important is it seems that as much as I dig into and study some of the pathologies of the COVID-19, it seems that there are 3 cycles. Week 1 you get it and you notice something's not quite right. 2, 3, 4 days in, you start to get an elevated temperature, and then around week 2, 7 or so, that's when really people are reporting they're starting to see a lot of the lung and pulmonary damage and just collapse. So I think again, having this device, could help alert people and give them early indications, so that they can avail themselves of some of the treatments that are coming. I'm shifting around in points of time as I'm saying this, because I'm fully expecting that within the next 12 to 15 months, or even 6 months, we may have a vaccine against COVID, as well as it looks like remdesivir or other therapeutics are out there that can help people if they do contact it, so that I don't expect everyone's going to get inoculated with a vaccine, but certainly it's likely the COVID virus is going to stay with us. But having better monitor on your wrist that can take into account other parts of your physiology, other than just heart rate, I think would be a great boon. So anyone at Apple who's listening to this, you now have new marching orders.
Call Mark. Which leads me to, as we always do, how do folks get in touch with you if they want to talk about COVID-19 or the financial results or just money in general?
You can get me at Mark Fuccio, MarkFuccio on Twitter, or you can contact me through LinkedIn.
Perfect. Mark, thanks for the time and the wisdom. This is always a fun discussion, and hopefully, we gave some people some things to watch for as we all struggle through COVID-19 and see what Apple's results are in the coming quarter.
Stay healthy and socially distance.
Amen. Amen. Folks, I'm Chuck Joyner. This is MacVoices. I'll echo that. By all means, above all else, please stay safe. Until the next time, and as always, thanks for watching. Visit MacVoices.com for show notes and to connect with Chuck on social media. Get involved in our Facebook group or like our Facebook page, and get more out of your Apple tech with MacVoices Magazine, free on Flipboard and on the web. And if you find value in it all, consider supporting us through either our Patreon campaign at patreon.com/MacVoices or by making a one-time donation via the PayPal link on our front page and in the show notes of each episode. You will join these fine people who help bring you Mac Voices. Advertising handled by Backbeat Media at backbeatmedia.com. Bandwidth provided by CashFly at cashfly.com.